This content is for educational purposes only and is not investment advice. SpaceX has finally entered the public market through its historic IPO, and the excitement is massive. The company is now trading under the ticker SPCX, and investors are asking one big question. Is this the beginning of a long-term wealth-building opportunity, or has the stock already priced in too much optimism? SpaceX has made history with its IPO, but investors need to be aware of the risks involved. SpaceX's market entry was impressive, with a $75 billion IPO fundraising and a valuation exceeding $2 trillion. However, the stock performance needs careful monitoring. Here is the important point. A great company does not always mean a low-risk stock. SpaceX has changed the aerospace industry. It has built reusable rockets, expanded Starlink, and created one of the most ambitious technology platforms in the world. But public investors are not only buying the company's past success, they're buying the future growth story. And at this valuation, the market is already assuming that many things will go right. That creates risk. The first major risk is valuation. A valuation above $2 trillion leaves very little room for disappointment. For the stock to keep performing well, SpaceX needs to prove that its future businesses can generate massive revenue and profit. That includes Starlink, Starship, launch services, defense contracts, AI infrastructure, and possibly new transportation markets. The risk is simple. If growth slows, margins disappoint, or timelines stretch, the stock could reprice quickly. Even great companies can struggle when the valuation is too high. The second risk is Starlink pressure. Starlink is one of SpaceX's most important businesses because it brings in recurring revenue. It also gives SpaceX a strong position in global satellite internet. But investors may now expect Starlink to carry too much of the company's valuation. Starlink may need to support ongoing satellite launches, network expansion, customer growth, and future cash flow. At the same time, it may also help fund expensive long-term projects like Starship and other ambitious SpaceX programs. So the question is, can Starlink keep growing fast enough while also becoming highly profitable? That is a key risk investors should watch closely. The third risk is connected to XAI and artificial intelligence. The AI angle makes the SpaceX story even more exciting. SpaceX, Starlink, and XAI together could create a powerful ecosystem involving satellites, data, compute power, and AI-driven services. But AI is expensive. Large AI models require huge spending on chips, data centers, power, infrastructure, and talent. If XAI becomes a major part of SpaceX's growth story, investors must also consider the financial risk. AI could expand the opportunity, but it could also increase losses and cash burn before meaningful profits appear. That makes execution very important. The fourth risk is Starship execution. Starship may be one of the most important projects in SpaceX's future. If it works at scale, it could reduce launch costs, support Mars ambitions, expand satellite deployment, and open new commercial markets. But investors should not assume that high-cadence commercial Starship launches are already guaranteed. There are still engineering, regulatory, safety, and operational challenges. Testing is not the same as full commercial scale. If Starship timelines slip or costs rise, it could affect investor confidence. For a company valued this highly, execution delays can matter a lot. There are still engineering, regulatory, safety, and operational challenges. Testing is not the same as full commercial scale. If Starship timelines slip or costs rise, it could affect investor confidence. For a company valued this highly, execution delays can matter a lot. The fifth risk is IPO euphoria. Retail excitement can lead to volatility, with early trading driven by emotion rather than fundamentals. Early trading may not always reflect long-term fundamentals. It may reflect emotion, scarcity, media attention, and fear of missing out. So investors should be careful not to confuse IPO excitement with a confirmed long-term entry point. The sixth risk is future share supply. After a major IPO, the number of shares available to trade can increase over time. At first, A limited float may support the stock because fewer shares are available in the market. But later, lockup expirations, employee sales, insider sales, or future offerings can add more supply. When that happens, the stock may face pressure, especially after a strong IPO rally. The seventh risk is limited shareholder control. Founder-led companies often give founders more voting power than regular shareholders. For SpaceX investors, that may mean less say in major decisions. This can work if leadership executes well, but it becomes a risk if investors disagree with strategy, acquisitions, or spending. Buying the stock also means trusting the leadership structure. So what should investors watch now? The key areas are Starlink profitability, company-wide cash flow, XAI spending and losses, Starship launch cadence, regulatory approvals, future share supply events, and governance updates. These signals will help investors understand whether SpaceX is growing into its valuation, or whether the stock has moved ahead of the fundamentals. The story is exciting, but the numbers still matter. The SpaceX story is compelling, but the investment case is complex and requires careful consideration. Visit AIStocksHub.com for more AI stock insights and unusual options activity.